Welcome to Fomo Consulting for your daily AMC stock analysis video on Thursday, May 13th. Ladies and gentlemen, we have one last hurdle to go, and I'll show you very shortly, and we are certainly ready for launch. And as always, the apes are winning, the diamond hands are winning, and the retail investor is winning. So if you find this video informative and entertaining, please like, share, comment, and certainly subscribe. I would appreciate the support as it is a newer channel. Let's get into the video. As always, I want to thank everyone personally who has liked, shared, commented, and subscribed. It means the absolute world to me, and thank you from the bottom of my heart. Let's start with a quote. For every action, there is an equal and opposite reaction, by none other than Sir Isaac Newton, founder of physics. As much as the shorts have a reaction to the stock of AMC, there is an equal and opposite reaction, which is a rise in price, eventually. That eventuality came to pass today. So Mr. Newton was certainly right, and I believe the equal reaction will continue in the coming days. So the big catalyst today, the 43 million share at the market equity offering is now complete. No more FUD, no more dilution. We are done. Sky is the limit. Nothing but buying and selling from here on out. No more market manipulation, no more hit articles, no more fear. So let's look at the broader market. It was a refreshingly green day, and AMC certainly felt the effects of that. Tech finally had an overall good green day, as well as many other sectors. It was just a good green day. All three major indices were up substantially. Obviously, there were buying opportunities for many investors after yesterday's bloodbath and the days leading up to. So it was good to have a green day finally. So let's look at AMC. We closed at an impressive and incredible $12.77 off of the daily high of $14.20. And I would imagine you thought we were going to the moon today. And I had a feeling we might be, but nonetheless, we have to settle for $12.77, right? Absolute beautiful day. Up $2.45 during trading hours, 23.74, and as expected, major sell-off after hours, but it appears we are recovering quite nicely going into tomorrow's trading day, but at the moment we are down 35 cents. No doubt profit taking is ongoing. The overall broader market, however, AMC followed it for the most part, except for around the 2 o'clock hour, give or take, as the market had a kind of a sell-off at that point. That is when AMC, for whatever reason, rocketed to its highest level intraday. For the remainder of the day, consolidated, sold off. Obviously, a lot of short selling, as you likely saw. But overall, we followed the broader market even up to a close. So let's look at the bigger picture here. So this is the daily chart. Big juicy green candle today pushed us right back into bullish territory solidly. The moving average is solidly in bullish territory now. The MACD has now crossed over the signal line. We are in a MACD crossover scenario. And the RSI, which I don't show very often, but it is at its highest level it's been in quite some time. So we'll get into this shortly. So let's look at the hourly chart over the last, let's just say, 3 to 4 weeks. We are clearly in bullish territory. The RSI, as indicated at the bottom of your screen, shows we have not been in the quote-unquote oversold area for about 3 weeks when we got up to $12 and I believe 22 cents intraday. So a much needed pullback towards the latter half of the day to kind of cool that off, get us back into the channel. We don't want to be up there too awful long, and except for when we're actually squeezing. So I was actually kind of relieved to see a good healthy pullback at market close. So this is where it gets interesting. So I've often said, and for some of the newer subscribers and viewers, $14 I have long held has been a very, very important line. I believe that is their line of demarcation. That is a line they are not going to allow us to cross. We touched it during the baby squeeze in January. It forced it right back down, as you can see. In mid-March, they certainly did not want us. That, if, as you remember, we were under those heavy, heavy short attacks, SSR, 10% down days. Once we got to $14.54, they absolutely hammered us down. The FUD articles came in earnest, and we have fought really for the last 4 to 6 weeks just to get back to where we are today. We had a very, very impressive day, but as you can see, when we got above $14, they absolutely forced it back down. That is a line we have to cross. That is the last hurdle. But as you can also see at the bottom of the chart, the 3 times we have crossed that red line or touched that red line, we have been over at least $14. So it's an interesting viewpoint. So what I want to show you here is, again, history always repeats itself, or it seems to be. So in mid-March, when we hit our intraday high of $14.54, the volume that day was 278 million. Go figure, today is 289. Way, way higher than the near 50 that we had yesterday. Undoubtedly, there was a lot of FOMO, a lot of some covering. I think there was some fear around margin calls. There were certainly resetting positions by the shorts. But overall, we had an extraordinarily high day of volume. And if you look, the candles are nearly identical, especially the top wicks. But you can see where the extreme selling pressure, when we got above 14, they were not going to allow it to rise much higher, as evidenced by that the wick at the top of the green candle. Ironically, the RSI touched that trend line or got very close to. The volume candles in the middle of the screen are nearly identical on that. The one major difference is we're coming out of a bearish scenario, just crossing over MACD into bullish territory. At the time of the March candle, we were already well above and well on our way upwards. So I think we have a big trajectory that we can get to cause a squeeze. It is a far different scenario, albeit very similar in appearance. When in doubt, zoom out. We are clearly on the uptrend. That big juicy green candle doesn't happen every day. So enjoy it while it lasts, but that is a beautiful setup going into tomorrow. So no doubt, today was a lot of people that have been sitting on the sidelines. Not everyone is an ape, a diamond hand, or a committed retail investor. A lot of people like to jump in, jump out, day traders, undoubtedly institutions. Everybody wants a little piece of the action. And then obviously you see the sell-off at the end of the day after market. I believe this will continue over the coming days. I believe everyone that's on the sidelines will continue to jump in. There's a ton of social media activity, trending here, trending there. So I believe we are set up beautifully going into tomorrow as well. I've shown this many days, but there is no escape for the shorts. The only escape is to squeeze. Now, every day I've suggested we turn on some good music going into the trading day. We've been green, right? So undoubtedly somebody turned on the OJs this morning, hopefully. Tomorrow morning, turn on 50 Cent. I Get Money. It's a fantastic song by a fantastic artist. Get pumped up for the trading day. We have a huge day ahead. We need all the positive vibes we can possibly get. So another quick look at the action after earnings, as evidenced by the orange bar in early March. AMC has a very distinct history over the last 4 earnings and now 5 of running up after earnings, and this is no exception. So let's look at what they were up to today regarding borrowed shares and return shares. So this was about the time of market open at 9:30. They returned 858,000 shares and they borrowed 466,000. Not a lot to go around apparently, but the return change was 391. So they got 391 off the books, right? Let's go into around midday. They returned 1.57 million borrowed shares. They borrowed 618,000. So a net of 952,000 shares returned. Clearly they were getting out and covering, right? And then they got into the afternoon. Obviously, when we got up to 14, you can clearly see where they borrowed heavily. They did return 6.59 million shares, and they borrowed 4.04 shares. So they were able to return 2.5 million shares, albeit they used those to their advantage to short the price down from that critical $14 level. So let's get into what they were up to today. So they start the day, they return the 392,000 shares, right? Price goes up, covered, right? Let's go into the rest of the day. Gets up price, they borrow shares, they short it right back down. Get into around 2 o'clock, 1:30, 2 o'clock, they returned 951,000 shares, price goes up, they borrow more shares, shorted back down from that critical $14 red line. They take more borrowed shares and they short it back down to market close. So you can see how they're kind of stock surfing. They are resetting their position, almost a leapfrog type scenario where they're setting themselves up, in my opinion, to ride the squeeze down. They know it's going to squeeze. We know it's going to squeeze. They are just setting themselves up in the proper position to ride it back down and offset their potential losses. So this is the last hurdle, in my opinion, we have to jump to initiate the squeeze. So this is through yesterday, Ortex, as you can see by the yellow line, that was the line they got out of their positions, as shown by the short interest trend data lines. They quickly exited when we got into the $12.50 to $13 range. The price ran up to $14. They shorted it immediately back down, as evidenced by the borrowed share volume. As you can see, those trend lines are now trending downwards. They are beginning to exit their positions and cover. We have to keep the buying pressure up to get above that $14 level. I believe if we get to $14.50, we sustain it. We get to 15 possibly, that will initiate the squeeze. That is just my opinion. So let's look at where history shows us. This goes back to, again, mid-March. That critical $14 level at the top of the charts, you can see, got there, wicked up, they slammed it back down. What did they do today? It wicked up, touched $14, they shot it right back down. But we are in a far different scenario regarding the MACD, the trend analysis, the starting point of where we are versus back then. The scenario is the same, but the mechanics are far different. The RSI, as you can see at the bottom of the screen, we are touching that yellow trend line for the first time in quite some time, about 3 weeks or so, since we were at the 1220 level or so. So it is absolutely essential we maintain at least in the 12s, if not 13 tomorrow, to maintain that price pressure for them to start covering. So let's look at the 1 minute chart from mid-March and the one from today. So mid-March is on the left, today is on the right. If you look at just how the stock reacted, so the high point intraday, $14.54, was actually within the first hour or so of market open. And then it tailed off from there because they shorted it down, as evidenced by the price action. You can see the MACD, you can see the RSI data. They were pressing. Today was a far different scenario. We started low, ran up high through the latter half of the day, and they did everything they could to close it down. But you can see where we owned it. We kept it from getting shorted back down, albeit we lost over $1. I believe that we will regain that $12 to $13 level tomorrow at some point, if not higher, and I'll show you why. So what I want to show you is the minute chart from January 27th. This is not the daily chart intraday. This is pre-market. So if you were sleeping at 4 a.m. Eastern, you would miss the initiation of the squeeze, as evidence on the far left, where we had a huge spike at 4 a.m. at the opening trading, and the price action, like most, up, down, pre-market. And then you see the huge, massive run up that started around 7 a.m. and we closed at the all-time high for the squeeze that most people don't realize was at $25.80. That happened right before market open on the 27th. Yeah, that's right. It is over $5 higher than what most people recognize as a $20.30 high because it happened pre-market. Let's look at the 28th. So the 28th, again, caught you sleeping. So everybody saw the price action tail off at the end of pre-market around 8 p.m. of the 27th. As you can see, 4 a.m., it rocketed right back up to $23. Inevitably, a lot of people made a lot of money. Again, that was the high point. So there's a history of AMC having huge spikes pre-market. So the message to you is don't sleep in. So the definition of early bird gets the worm. So if you were up trading pre-market and watching this, inevitably you got very excited. Some people cashed out at a very high level. The yellow bar shows the actual recognized intraday high of $20.30, and then it fell off from there. It to $11, so it dropped well over $10. It recovered towards the end of the trading day to around $19.60. However, the following day, as we all know, on the 29th, it fell off like a cliff all the way down to its close to $5 level. So the message again is be diligent, watch this day and night, because the squeeze could happen any time, but there is a history of happening pre and post market. So let's look at the options for today. The left side is today, the right side is yesterday. The green area is, in my opinion, the battlefield for tomorrow, 10 to 11.50. Albeit I would love it to be above. If we close $13.01, we will put 128 million calls in the money, top to bottom. That is absolutely ridiculously huge going into next week. But if we close, let's just say above 12 tomorrow, which you can clearly tell they want to fight around that 12 to 12.50. If we close above $12, we will still be nearly a little over 100 million calls in the money. There is not a ton of open interest in the put side that we need to worry about at this point. They are clearly playing defense to limit the amount of calls expiring in the money tomorrow. Huge trades today, deep in the money, puts in 6,480 contracts September 17th at an $8 put. Undoubtedly that is hedging, but those are absolutely astronomical amounts of money being hedged deep in the money. So overwhelmingly bullish at 2.65, but this is down substantially from yesterday, and I believe it's a good thing because I believe the puts are starting to get more involved because I think everyone's beginning to recognize the overwhelming possibility of a true squeeze, so they're playing the crash side of the squeeze, right? The downside. I think this is a very bullish thing and yet another trigger for a squeeze in the very near future. So let's look at the short interest. So top is today, the bottom is yesterday as a comparative. Short interest did not change all that much. Surprisingly, estimated short interest free float was down just a little bit as indicated by the trend lines I showed you. Percent of free float on loan was down just a hair from yesterday as indicated on the trend lines. Shares on loan are still astronomically high and they are not turning them in. They are just recycling as I just showed you at 152.26 million. Days to cover is about the same. Cost to borrow has gone up yet again by about 3 points to 22.44. Utilization astronomically high again at 100%. No shares available. Shares, the retail owns 72.7%. That has gone down a little bit. However, institutional percentage ownership has gone up, no doubt, because the 43 million shares are now institutionally owned in general. So that's still okay. We still own the stock, no doubt. Today's volume, again, absolutely huge at 289 million. Short shares available at the time of this recording, a big fat goose egg. And the short borrow fee, this was yesterday. Today, I guess we broke Fintel yet again. So who knows what it is. This is an interesting trend data chart. So short interest ratio, this is the days to cover by sector in the United States and Canada. So you can see the trends of the short interest for the days to cover for all the sectors on the right side. AMC pretty much follows, in my opinion, the consumer discretionary trend line that is green. As you can tell from the mid-April area, it has tailed off substantially for days to cover. I believe a lot of that is they are exiting positions throughout the economy due to some of the rules and regulations and just the overall economy. I believe they have taken profits. Obviously, the tech segment and a lot of other factors have been taking hits over and correcting over the last 2 or 3 weeks. So it's an interesting viewpoint, looking at the entire economy and how it's trending. So I showed this yesterday. The short value, as from a dollar perspective, was, as of yesterday, 1.54 billion. Today it is 1.57 billion, which again goes back to the borrowed shares. There is more short dollars involved, which tells me, in my analysis, they are covering at they are re-entering at a higher price point, going back to the recycling methodology, right? They are incrementally surfing the stock as it goes from $10 to $11. They're re-entering their positions, and obviously the value would go up, correct? So here's a bonus play for you. Do your own due diligence. I am not a financial advisor, nor is this financial advice. However, I continue to be amazed at XLM Stellar Crypto. On the big chart, it is just continually grinding upwards. What you see in the small black box is our little friend Doge. I am personally invested in both. But Stellar has a MACD crossover on the longer term. This is the daily chart. And it has bounced off of that orange illustrated trend line. I believe Stellar may make another run, but if you look at the performance, over the last month or so, it is clearly just steadily grinding upward. It is not a showstopper. It is not grabbing headlines, but it is clearly on an upward trajectory. Doge obviously has taken somewhat of a hit after Saturday Night Live, but again, I just like to show what I find. So as always, I've got skin in the game. I am in this with everyone till the end, till the squeeze, diamond hand all the way. So adjusted the bold prediction between 11 and 1250. Inched it up just a little bit. I still believe those calls are going to be a battlefield going into tomorrow. I believe the shorts will do everything they possibly can to keep some of those calls from expiring in the money. I do believe there will be a bit of a, I hate to call it a gamma squeeze, but I believe the market makers will start buying shares, and that's possibly what occurred today as the price went up to prepare for having to purchase those. They typically do that in advance as opposed to the day of expiration. So let's end with a quote. All I have is one thing to say. Today was a good day. By Ice Cube, fantastic artist, fantastic actor, and I'm a huge fan personally. So as always, I would like to thank everyone for watching. It has been a fantastic day, a wonderful day, and I'm expecting good things tomorrow. So if you found this video informative and entertaining, I hope you like, share, certainly comment, and most importantly, subscribe. It's a newer channel, and I would appreciate the support. I hope to talk to you very soon. Take care.